optimistic about Bitcoin. And let me explain why, but also why the risk is here. This is macro financial education. You say 1960 and 1980, my generation, the boomers, didn't like stocks because everybody, at my time of when I was a kid, everybody said anybody invests in the stock market is a gambler. Now everybody's in the stock market. So how did that happen? Well, in 1974, they brought this thing called a 401k out. I won't touch that thing. I would not touch a 401k or an IRA. Why? Because I don't have to. You know, they tell you exactly, they tell you when to wear the mask and when to get a vaccine. They tell you what you can invest in a 401k and an IRA. I refuse to do that. I refuse to do that, but I don't have to do that because as an entrepreneur, I create my own assets. I don't need the stock market. You do. I'm not saying don't invest in it. I'm not saying don't have a 401k, don't have an IRA. Just screw you. I'm not going to be told what to do. That's why I'm an entrepreneur. You like being told what to do? Go to school, get a job, save money, pay your taxes, get out of debt, and invest in the stock market. I don't want to do that. More than that, it's what you have to invest in. They had to do it because my generation wasn't investing in it. So that's why between 1960 and 1980, they didn't like stocks. So the 401k came out. Then what happened is in 1987, the stock market crashed. So Greenspan comes out. He's a Federal Reserve guy. Remember, the Federal Reserve is not American. It's not a government agency. So he came out, and what Greenspan put was what I call a PPT. It's the Plunge Protection Team, or also called the Greenspan put, or also what people say, don't fight the Fed. Basically, what Greenspan did is every time the stocks crashed, Plunge Protection Team would protect you. So my generation, the boomers, are going, well, I don't have to worry because every time the market crashes, the Federal Reserve Bank and the Treasury will bail me out. So that's today we have our US corporations are zombie. 20% of US corporations are zombie corporations. It means they're broke, but they're being propped up by the Federal Reserve Bank and the government. That's communism. So anyway, stocks get protected. Gold is a good investment because the Fed, all the central banks in the world now own gold. So they're not going to let gold crash. They'll do something to make sure the price of gold stays up. So I don't like stocks, but I like gold. Silver is getting more valuable because gold, all the gold never disappears. It just keeps piling up. But silver is being used in the Green New Deal, solar cells, in medical things. So I like silver. And if you can see back here, look at this here, silver was $2, $50 here when the Hunt brothers were trying to manipulate the gold market. And even today, it's only 27. But you can't get any because they're manipulating it, trying to force it higher. Well, I'll say it one more time. This is how much opportunity you have, and that's gold, silver, and crypto. And you can make more money planting apple trees or water, like that deal I was talking about. Okay? So here's stocks. The government will make sure it doesn't crash. Gold will not crash, but crypto could. You know why? Because the Fed doesn't want it. Because the reason I like crypto, the reason I buy Bitcoin and Ethereum and all that stuff is I don't like the Fed. When I talk to most of the young guys, they don't like the Fed either. But the problem is, and this is why you've got to be smarter, is that the Fed wants to take this out. The European Central Bank, the ECB, wants to take it out. The Bank of Japan wants to take it out. The Bank of China wants to take it out. So that's why you crypto guys, you've got to be smarter today. You don't just sit there and go, oh. Does that make sense to you, Alexandra? So guys, you got to be smarter because what possibly, it hasn't happened yet, is a Fed coin or a yuan coin, a Chinese coin. China will probably have it before the U, and there'll be a European coin. And they want to destroy Bitcoin. So you guys in Bitcoin, you've got to be smarter. So as it's coming down, like I said, I'm still going to buy more. But when it passes 27,000, I'm going to back up the truck, just like I did when it passed 9,000. Because that's what, let me show you that the bigger thing here is this. This is the future. This has not happened, but it might happen. If there's a Fed coin, they're going to get rid of the commercial banks. You see, the only way the money can go into the marketplace right now is the Fed prints money. They give the money to commercial banks like US Bank and Bank of America and Wells Fargo, and they lend the money out. But if the Fed coin comes out, they don't need these banks. And you worked for a bank, didn't you? And the only way somebody could get money, they got a credit card, real estate, or a student loan, right? So if there's a Fed coin, Wells Fargo is gone. I'm not saying this is going to happen. This is my prediction of what might happen. Don't say I'm saying it's going to go out and all this stuff.
And the reason it's in trouble is because when we had defined benefit pension plans, if the government promised my dad $1,000 a month, they had to give him the $1,000 a month. And then something happened in 1974. It was called ERISA. And ERISA stands for Employee Retirement Income Security Act. And the government says income security, you know they're lying to you. And today it's called the 401k, the IRA, the Roth IRA, a SEP, Kios, and all this stuff. And when it shifted from defined benefit, which is a guaranteed set amount, and even like Ford Motor had defined benefit plans. So if I worked for Ford for, let's say, 30 years, I got guaranteed payment every month. Then in 74, it shifted to defined contribution. Those are massively different plans, but of course they don't tell you that in school. I know the stock market is way up there, so I shifted into safety. I said, ¿Qué pasa? What did you do? He says, I shifted into bonds. I went, oh, you know, because he drank the Kool-Aid that U.S. Treasuries or bonds are safe. And when I was a kid, that was true, but not anymore because of the change from defined benefit to defined contribution, which took place in 1974. So we have we have a new apprentice at the Rich Dad Company. His name is Spencer, and he's just turned 20. So without financial education, the average employee or, a doctor or a lawyer who has a IRA or a SEP or a Roth IRA or a Kio, they don't know anything about investing. All they're doing is sipping on the Kool-Aid. So I want to show you why that bus driver, a great guy, 40 years on the bus, he says, oh, I moved to safety. So what happens here is the relationship, as you can see this chart here, you have bonds like U.S. Treasuries, and then you have stocks, something that's called equities. So what happened was when Nixon took the dollar off the gold standard in 71, remember 71 was Nixon taking the dollar off the gold standard. 72, Nixon went to China, which opened the door for Walmart shoppers and Amazon. And then all these things started to happen. So the U.S. economy started to sink because the Chinese were producing better products at better prices. And then a guy like Clinton opened the Chinese door to the WTO, the World Trade Organization. So when people wonder why I'm the most boring person on earth, that's what I think about. I go to parties and I sit there eating potato chips and drinking beer because I don't know what else to talk to people about. So I'm going to talk to you. So what happened when I was in my 20s, because the economy was stalling, they had to start dropping bond yields. So my numbers are probably off because I don't really like bonds. But let's say back when I was getting into the workforce, you could get 16% on a bond. So if you put $1 million or 100,000, whatever it was, you got 16% on your money. But as the economy slowed, they kept dropping the bond prices. They wanted to drop debt, make it cheaper. Then what happened is that the stock prices higher. So that's macro. That's the relationship between bond prices coming down and stock prices going up. So after 2008, what they call the GFC, the Great Financial Reset or whatever they call it, they had to keep dropping bond prices lower and lower and lower, and it got near zero. So they call it zero bound. So in some countries in Europe, you know, if you have $1 million, you put it in a bank, they charge you money for there's no interest in it. And they're printing more and more money on the macro level. And what happened is then these companies like the Fortune 500, they were borrowing cheap money to prop up their stocks. So they were buying back their stocks, which sent the stock price higher. So today, this is April 2021. The stock market is at an all-time high. Bond prices are about, I think the 10 years about 1.5%, so it came up just a little bit. This affects the whole economy.
That's when I became kind of a gold bug and a silver bug. And I've taken two companies public, a gold mining company in China, which the Chinese took, and a silver mining company in Argentina. So I'm a hardcore, hard money, non-paper guy. But the trouble with silver, it's a real asset. It's an industrial metal first. And the biggest people that use it are some of the biggest corporations in the world, like Sony, Apple, Toshiba, any battery company. And now with, the ESG, environmental social governance, which Carney took over from the Bank of England. You know what I mean? He's taken over that for a company called Brookfield in Canada. Everybody's shifting green. So silver is a green metal. And so I was really happy when Reddit at least stirred the water up, but they were messing with real companies. Toshiba, Apple, Tesla, Sony, Apple, they were messing with the end user. And the thing I know since I started a gold mine, it's 100% manipulated. They keep the price low just so it doesn't blow their operating costs out of the water. But that's coming to an end now because the consumption of silver is going up while the stockpiles are going down. So I backed up the truck the other day. I went to my American Precious Metal guy, Jerry. I said, "How much silver you got?" I said, "I'll take it." So today, the hardest thing is storing all the gold and silver I have. I've collected over all these years. I never sell. And any idiot could have done it. When silver was like 10 cents, you can buy silver. And I just kept accumulating. I never saved dollars because I'm like Trump, I use debt. I use debt to buy real estate. And the more debt I use, the less tax I pay. So I had all this cash, and I always shifted cash to physical gold and silver. That's what Rich Dad Poor Dad's about. And so I stayed, I'm an idiot because my friend offered me Apple at $18 a share. But I'm just kind of a stupid Marine. I said, I think I'll just stay and suffer with all the gold, silver, 223, 9mm, 38 special, and Bitcoin. It's the hard assets that are starting to win right now. So it's always a silver lining. That's what I'm trying to say. I'm not trying to take sides, but I think that people should wise up. And I'm not saying I'm right or wrong. I just take a point of view. But I think it's time we all wised up. That's all I'm saying. And that's why I appreciate what you do. And feeling sorry for our silver and gold guys. Don't worry, we're doing very well right now. So we appreciate the compassion.